Hello everyone, this is Evan here from the Trade Risk on Friday, June 24th with a weekend market recap video. In this video, we're going to spend basically the entire time just going over the current market environment and also some of the other major markets because we had such a shock to the system here on Friday. We're going to just spend most of the time covering this, and there's a few points I want to go through. We'll skip the trade ideas and individual names for either another video or maybe a blog post later this weekend. So we'll jump right into it here. S&P 500 getting slammed down 3.64%. This, of course, is off of the UK's vote to leave the European Union. This is something that clearly markets were not positioned for and expecting. I believe odds on some of the betting sites out there yesterday were laying some 7-1 that the vote would be to stay in the union. I don't know if that's completely true. I didn't see those odds myself, just from what I read. But at any rate, clearly a surprise, clearly a bit of a shock here to the system after seeing the results come through last night. Now, let's first look at some of the levels technically here, and then we'll cover a few other points. We'll start with the weekly chart, and we were down 1.64% this week. We were actually down larger last week, down 1.69% last week. But the magnitude and the way we were down this week, of course, is what, you know, the sort of the interesting talking points are. Notice now we are convincingly away and rejected this breakout or this retest of this downtrend line extending from the all-time highs. We have thrusted off of that trend line, and we are now back into a previous level of support right in here around 203.50. Notice also we are below the 20-period EMA, and this is the first time we've been below it since February 26th. So we had a sharp thrust lower below the trend line. Notice the 8 and 20 haven't quite crossed down yet. That's because of such of the outsized move lower this week. And we spent most of the week actually up here above this breakout line for most of the week, and then on Friday, of course, is where we got this complete downside move. So that's the weekly picture here. We are still arguably, in the top quarter, 25% of this last leg off of February. That could be a constructive painted picture right there. We could see if we did just overshoot this 20 EMA, and next week we do get a bounce back above it. That's also sort of the bullish interpretation here. But let's now go down to a daily time frame and take a look at some of these levels. This is the 203.50 area. This is what has held up the market since mid-April, or actually even going back to March, as markets kind of grinded on this 203.50 level, and we closed right into it. We did close below it, but if you're looking with one eye closed and kind of using crayons here, you can see we're basically at support. We closed at support. There's still sort of potential here that bulls can come to the rescue. And that's going to be sort of my first point here, is a 3.64% down day. That's huge, something you don't see every month. And we need to see, it almost has to be treated, in my opinion, like a earnings report on a stock, where you need to see what happens, what's the follow through. You have a sharp sort of price shock and sharp move. You now need to see and let that dust settle a little bit and see, is there immediate follow through? Is there a bounce? Is it a dead cat bounce? Does it lead to something bigger? That's sort of what we're looking for into next week. We are at an interesting spot right here because it is support, but we came slamming down into support. So you have a negative and a positive there to say, well, we have to sort of wait and see what happens. Now, if we look at a few different things here, again, I talked about where we are actually positioned here, but if we did put like a fib retracement tool off of those February lows and using the highs from recently here in June, you can see we are still hanging up in the top 25% of this entire leg higher. Now, looking at this, we can start to see where potential pullbacks, retracements would come in. And you can see even the 50% retrace is all the way down here at 196. So you could look at it a few different ways. You could say we're still strong up here, holding the top 25%. Or you can look at it the other way and say there's quite a bit of room to come back down here to make a significant pullback and even still be considered sort of healthy, right? Even a 50% retrace isn't a bad thing when you're in a bull trend. So keep these levels in mind. Something that's interesting is just to see where all of this comes in. Of course, the golden ratio down here all the way down at 192. So perhaps we have to come back down here next week, in the next couple of weeks, and start to put in a more significant retracement. That's potentially, that's certainly a potential outcome. And I mean, more along those lines, let's just point out here too that there is not a lot of previous price memory and supply and big levels to work through once we start to break through this 203 area. Notice there's a lot of air in here. There's not too much besides, maybe the round 200 level right here that had some previous price memory going back to, say 2015. There was a lot of supply in here right around this SPY 200 level. But really, if we start to get some immediate follow through next week, that could start to get ugly really quickly, just given it's pretty thinly traded in here down below sort of this level. So something to keep in mind next week. It's going to be very important to see how we start the week and how the market initially reacts to it. So I think that pretty much sums up where we kind of stand here on the S&P 500. We'll look at the Qs and the IWM. Before we do, though, I want to just point out and address one thing. We came into today pretty long. We had probably 75% exposure on the long side. So this was a tough day. This was a painful day for us. And I got a lot of questions from members and from general Twitter and stock twits how I was going to handle today's open. And I mean, most importantly, don't panic, right? You have, you hopefully have a plan. Hopefully you've positioned size appropriately. So you always know sort of where you need to be getting out, and hopefully your size is in line. But when you have, and I'm talking specifically about a day like today where this is a rare event, right? We don't always sort of open up down 3.5% across indices, right? This is not an every week, every month occurrence. So I'm talking about special circumstances like today where potentially on the open, if you are holding positions overnight, the stocks are going to open up beyond your stop loss, right? That is a potential if you trade with tight stop losses, or perhaps you're trailing it, whatever the case is. The way I like to think about it is I don't obviously think panicking helps. I also don't think rushing for the exit immediately is the best answer either. And now, again, it's going to depend. This is the way I handle things. If you're a newer trader, if you're not comfortable looking at sort of quicker, shorter term time frame trading, exit immediately. Again, your first loss is always going to be your best loss. I have nothing wrong with that at all. But the way I like to look at things is to let the dust settle a little bit. So, in other words, if your stop loss was at $99 in a stock and the stock opens at 97, you're already way beyond it. If you have to give up another 20 cents a ground to see kind of how the market acts, I'm fine with that. But what hopefully you could try and do is catch some type of bounce off of the open, some type of short covering rally, some type of stabilization, and then a move up, right? And we saw that today, and we were able to take advantage of this opening drive higher. And I just want to point this out. This is a 5-minute chart of today's open, and this was a significant move, and this makes a big difference, especially to your bottom line. If you're mass kind of exiting a portfolio or an account, if you're a tactical kind of swing trader like we are that looks for momentum, this, selling on the open down here at 204 is a big difference than selling up here at 206. You can get much better prices if you can capture this type of move and sort of wait for that dust to settle. So that's sort of what we did. I kind of go down on a 3-minute time frame on the open and just watch those initial bars, watch that urgency. If things are just looking horrid, then I start to just cut immediately, but even starting right from the beginning, this was lucky, okay, but we got just clear trend action higher right off the open, which helped me stay in and helped us sort of exit positions on, up here as opposed to down here. And it certainly makes a difference, especially as I look at where stocks closed on the day and where we sold them. We were lucky enough to exit all of our positions near the highs of the day as opposed to on the lows of the day. So that's the way I looked at it. The other thing I was looking at actually was I did actually think about some Fibonacci here, is that if you looked at the futures last night, we got all the way down to limit down at SPY 200 would be the equivalent, or SPY 199 or something thereabouts, because we did go negative 5% limit down yesterday on the futures. So if you were to try and do some type of retracement there, you can see the 61.8% using the close from yesterday all the way down to that SPY 200 level comes in right around this 206 level. So this is another significant level. And again, when you're down 5% the night before with a lot of long positions on like we were, your thought process going into the next day is to get out. You're not trying to, in my opinion, I'm not trying to sort of salvage any positions or hope that they're going to come all the way back up here and fill. I'm happy with getting out when the SPY is down minus 2%, when I know the night before we were limit down at minus 5% and I was completely stuck. So know when you need to exit, right? And this is all going to depend on your trading plan and your process. So this is not going to be for everyone, but that's sort of the way we handled it. We were able to get most of our positions off into that first push higher into about SPY 206, and luckily those were close to the highs of the day in most of our stocks that we exited today. So hope that helps, because I did get some questions on that. Now let's quickly look at the IWM here, and you can see weekly chart, we're still above and broken out of this declining trend line from the all-time highs, but you can see we're still nowhere near the all-time highs. The more sort of constructive note here with the IWM is look, we are now below the 8 period EMA on the weekly chart, but we're still above the 20 period. Notice we're only down 1.3% this week. This isn't, looking at this chart here, nothing should come to mind to say that there was some crazy event or, some sort of anomaly day happen like we saw sort of on Friday, if you want to categorize it like that. This is a pretty standard looking weekly chart still. This is actually still pretty bullish. I'd be hard pressed to find a lot of bearish comments to come up with here. We are still above, basically a 20 period rising. It is flattening a bit, but mildly constructive. So again, the daily chart shows a little bit more of a bearish picture given how much and how quick we lost this ground. So similar comments apply to the SPY. The Qs is now the opposite, right? I showed you IWM, which is the bullish side. This is the bearish side, and we've talked about this for a little bit. The Qs, though, you can now see clearly lost the 20. It did last week, but now it followed through to the downside. The 8 and 20 are now curling over into this bearish alignment, and you're starting to actually lose support here, which is an issue. So for these reasons, we actually have a short position in the Qs, and we have a wide stop loss. It's not a heavy position, but it's something where we are clearly breaking support. We're clearly rolling over on those bigger time frames. Maybe the market is going to get some type of bounce here early next week. If so, we will adjust and exit if necessary, but the Qs are certainly the weakest of the IWM and the SPY. So that's sort of where I want to be looking for shorts. I would be here as opposed to the others. So that's the way I'm looking at it. The Qs, again, weekly picture is concerning, the most concerning to me, in my opinion, out of the three. Now, we spent a lot of time going over the market environment and those major averages. Let's look at TLT. We'll look at a few others here. TLT, sharp move higher, basically getting back to these recent highs here from a couple of weeks ago. Not much else to say, right? Overextended perhaps. Weekly chart, though, still looks like a very bullish uptrend. I know, if you're an economist and you're looking at rates and how, are we going to go negative, and you start to have that conversation, maybe that's something else that you're saying can't happen. But technically, this looks like an uptrend to me. it looks like many others that I've seen, and it looks like healthy action. I was interested in buying this. I almost bought this here, TLT, on last Wednesday, or this past Wednesday. It just wasn't convincing enough, and of course it had a nice move. But that's all hindsight, and that's fine. So TLT looks good. Gold, nice move higher, clearing resistance, weekly chart, extending higher. Again, this looks like a classic bullish weekly chart for me, and daily chart as well. This consolidation's resolving higher. Silver can say the same thing. Can also go to like a 1 hour on silver. Zoom out a little bit, and you can see potentially a little inverted head and shoulders here, and we're at this neckline. So if we start to break through $17, perhaps we have a nice $2 measured move higher, taking us up to about $19 on silver, and that's a pretty important level. That's this area on this line drawn here, which is just basically the bottom of this prior support consolidation from 2013 and 2014. So I like silver. I still own that in my longer term account. I've had it for quite a while, pretty much all this year, and that continues to do well. USO getting hit pretty hard today, 4.84%. We are short USO, giving out all of our trades for today. And if you do want our trades, head on over to traders.com/premium. Take a look at our membership that we offer, where we can get these trade alerts in real time. But we are short USO today. I like the breakdown of this wedge, and also losing this support line here that held in for the past couple of weeks, almost couple of months. So I like USO. I'm going to see if this can continue to follow lower, and our stop loss up there around 12, above 12, somewhere in there. So USO looks like a good short to me. UNG not really doing much, just kind of still hanging out here. It's pretty bullish action. It's just hanging around this $8 level at some at the prior breakout level. We'll have to see how that resolves. And then finally UUP, let's just look there, clearing back above this 2450 zone, getting back to recent highs here that we saw back in late May. Weekly chart, you can see starting to push back higher here. If we can get back into this range, we can start to ignite back into the midpoint, or even eventually to the highs perhaps, if we can start to clear above this week's highs. So I hope this video helps. A little strategy in there with some of this current events. It was certainly an interesting market, and I think it will continue to be so next week. Who knows what will happen? Could turn into a V-shaped rally all the way back to highs, surprise everyone. We could completely roll over. It's anyone's guess. It's uncharted territory as far as the economic events that sort of happened this week. So we'll have to see how that all plays out. So hope this video helps. Thank you guys for watching. I will catch you next week.